Hey Kevin, how we doing? Happy Tuesday.
Happy Tuesday, Garrett. How you doing?
Not bad. Nice to be into December and Thanksgiving's over and we'll be in Christmas in no time. So,
I know. I think I'm still in my Thanksgiving coma. I don't think I'm ready for the next holiday yet, but
right.
yeah.
Well, we got an exciting session ahead here today on over under Billings. So why don't we jump into it?
Let's do it.
So as you kind of know, it's a kind of a tough financial metric to explain, and obviously we know how important it is to understand where we're at for over under Billings and how it can track as we go through a project. So why don't I fire you a couple of questions and we'll go through it.
Yeah, let's do it.
So, I know you have a lot of PM experience in the field. In your opinion, why is it important to understand like really what over under billings are and why they're important?
Yeah, so I think over under billings, it's probably the metric that I think is maybe not difficult to understand, but it's maybe not as intuitive if you're not familiar with construction financials. And it's as most of us on the call know, it's born out of how revenue is recognized in the industry. So it's that delta between what you've actually billed on the project versus what you've actually recognized. And I think it is probably like a really good bellwether of understanding what the financial health on the project is not only from a cash flow perspective, whether you are overbilled or underbilled, but it can also be like an early indicator of like, hey, are we going to run over on our cost or not? But what we see a lot is, there's a lot of focus on getting to that number, like knowing what that overbilling or underbilling is. But if you look at a project and say, hey, $100,000 overbilled or underbilled, understanding the actual mechanics on the project that led to that over underbilling can sometimes be lost. And that's difficult, right? Because depending on what's driving that overbilling or underbilling, it could be a real warning sign, or it might just be a quirk of how the project is set up.
Yeah, absolutely. From that perspective, just could be a number on the screen, but it's really digging into the why, so that's important.
Exactly. Yeah.
So I see we have the billings tool up there. How do I set up the analysis here?
Yeah. So what you'll see is if you go to the project billings tool, there's this over under analysis tab here. And you'll see it basically what it lists out is all of your schedule of values on the project, both the number, the description, the contract value. But where you actually want to start is on this settings tool right here. So if you click on that, what you'll basically see is all of your base cost coding cost classes, so basically all your budget line items on a project. And what you're going to want to do is you're going to want to map each of those budget line items to a schedule of value. So if I look at this here, cost code 10,002 rough plumbing and electrical, well, obviously that's going to go to my rough plumbing and electrical schedule of value. So you're going to want to go through and map all of these. You don't have to map every single one. So for example, if you've got some general condition line items like supervision, PM, that's going to basically span the entire project, and it doesn't make sense to kind of group it into one specific schedule of value. You can basically leave that off and leave that blank. And I'll explain later how the analysis handles that. So once you have each of these values mapped, what you'll then see is if I go back to this here, so I've got my schedule of value number, the description, the contract value that I've set up for that schedule of value. And now that I've mapped each of those schedule of values or each of my budget line items to a schedule of value, I can see the budget I have associated with each specific line item and the percent of the total budget it makes up. So for rough plumbing and electrical, even though my contract value is $110,000, what I've actually mapped in terms of my budget is $43,000, which is 26% of the total budget that I've mapped. So you can basically start to tie that budget to that contract value.
Very nice. Okay. So what is the calculated contract value?
Yeah, so the reason we want to do this mapping here and get to that kind of what the budget is we have associated with each line item and the percent of the total budget is we want to get to this calculated contract value. So I think most people, when they set up their schedule of values, there is an equal amount of art and science to it. You're trying to come up with a nice round number to prevent or to present to the client. So that $110,000, it's probably directionally correct, but it's probably not absolutely correct. So what this calculated contract value is saying is basically saying, okay, based on the budget that I've associated with this line in here, that makes up 26% of my budget. If the contract value made up an equal 26% of the total contract value, so 26% times the total contract value of 335,000, then this schedule of value would have a contract value of 87,000. So right away, we can see that there's a delta between the actual contract value that I've presented to my client versus what the calculated value is based on how my budget is set up on the project.
Outstanding. How do we interpret the progress so far on the project?
Yeah, so now that we've kind of got it set up, we know what the values are. Again, because I've tied my budget to the actual schedule of value line items, I can then also see what my costs are. So as I'm coding my cost to each budget line item, I can see how those aggregate up to each of the schedule of value line items. So on this rough plumbing and electrical, I can see that I am $8,000 complete so far on the project. So if I take that versus what my budget on this line item here is 43,000. So I do 8,000 divided by 43,000. I can see I'm 19% complete. But I can also see that I billed $40,000 on this line item already. So I'm actually 36% billed. So this is right now, I can basically see what my over under billing is per line item. So now I'm breaking down that over under billing that I have for the total project, and I can see what my over under billing is for each specific schedule value line item. So if I'm 19% complete, I can then calculate my earned revenue. I have my build a date minus my earned revenue gives me my over under billing for this line item. So now I can see on my rough plumbing and electrical line item, I am $23,623 overbilled.
I like it. We're on top of our billings. We're green. We're not fronting money.
Yep.
So what is the expected billing while we're over here?
Yeah, so this is where it starts to get a little bit more in depth. So if I look at my expected billing calculation here, what I'm basically doing is I'm taking my percent complete and multiplying it by my contract value. So it's basically saying, okay, if I'm actually only 19% complete on this line item, if I only billed 19% of the $110,000, what would my billing be? So it's only 20,542. So that would basically be what my expected billing on this project is.
Understood. Now, what is the structural overbilling?
Yep. So this structural overbilling. So now that I have my expected billing, what I can basically deduct out of it is my earned revenue. So basically what this is telling me is what is my overbilling purely based on how I set up my schedule of values. So basically what this is telling me is I can take my expected billing of 20,542 and I can deduct the earned revenue, 16,377. So basically it's basically saying if I am 19% complete versus my contract value, and I'm 19% complete on my earned revenue, my expected billing is now comparing apples to apples. Or I'm sorry, my structural over under billing is now comparing apples to apples. And that 4,165, it's not because I'm overbilled or have lower costs or anything. It's purely based on how I set up that schedule value. So it goes back to this delta between the calculated contract value and the contract value. I'm basically saying, hey, 19% of that, that's my structural overbilling here. So it's purely based on how you set up that schedule of values.
Understood. Then kind of moving over there, what is the true overbilling?
Yeah, so the true overbilling is basically going to take a look at what's my bill to date and minus my expected billing. So my bill to date, I'm $40,000 billed. What my expected billing was if I only billed that 19% rather than 36% would be 20,000. So my true over under billing is 19,458. So this is an accurate reflection of not necessarily how I set up my schedule values, but purely based on what I overbilled. So on this line item, I was 19% complete and I billed 36%. So now that we've broken down it between the structural overbilling and the true overbilling, what you'll see is these two numbers add up to what my total overbilling on this line item is. So that's basically what you'll see is when you have an overbilling or underbilling on a project, it's usually one of two things. It is either kind of, hey, you've actually billed different than what you've actually completed on the project, or it's just a function of how you've set up your schedule of values. And that's what the structural overbilling and the true over underbilling is breaking it down in between.
Excellent. Love it. And just kind of moving on there, next column, how do we define expected costs?
Yeah, so the expected cost, you'll see here, it's basically the percent billed times the budget. So what would my cost be to basically support that I'm 36% billed? So I take 36% and multiply that by my budget on the line item of 43,000, and it tells me my expected costs are 15,686. Now, critically, what this tells me is I can then look at what my expected cost would be to support that billing versus what my actual costs are. So I can go back here and compare to that 8,000, and I can see my cost variance is $7,630. So basically, what I can derive from my over under billing is I am $7,630 lower in my cost than I would expect to be based on what I've actually billed against this line item.
Understood. So I guess in your experience, what are some reasons that might be driving this variance?
Yeah, so if you hover over this here, what you'll see is there's a few different causes that you could have lower costs than you would expect on a billing. One is like truly, hey, you overbilled the client, right? You were only 19% complete, but you billed 36% of the client. So that's the first one. The second one is you might have cost savings on the project. So maybe you aren't actually 19% complete, you're really 36% complete. You just did that at a lower cost than expected. So this $7,630 actually represents cost savings. And then the third one, this one's probably not as obvious, but what it could be caused is by schedule delays. So this is a function of, hey, you probably submitted your billing on the 15th or the 20th of the month, and maybe you're forecasting out through the end of the month. But then in those last 2 weeks, schedule delays happened, and you didn't actually accomplish as much as you thought you were going to when you submitted that billing. So that's the last reason that you could have a lower amount here is, hey, you've actually experienced schedule delays on the project. So that's are some of the reasons that you might see this cost variance on an overbilling. I can do the same thing where I'm underbilled on a line item and my cost variance, I have higher costs than I would expect on a line item here. So here again, it might just truly be because you are underbilled and that, hey, maybe you were 30% complete, but you only billed 25%. It could also be a warning sign that you've got cost overruns on this, that's costing you more money to get to a certain amount percent complete than you're expecting. And then the third one, this is probably the most important one, is are you missing change orders? Was it basically that the reason you have higher costs is because there's additional work that you did that you need to submit a change order for? So understanding kind of that's really what we're doing all this analysis for, is to get to this kind of final cost variance number and saying what is actually contributing to that cost variance, and is it a good thing, is it a bad thing, what is it telling me about this project?
Sure. Oh, well, I think we've kind of covered all the columns there in depth and pretty straightforward. And I like how we can have the fly out for the calculations. That'll be helpful. So if we kind of move down below there, how do we define the unallocated costs?
Yeah, so this is kind of the last thing you want to look at here. So this goes back to our mapping here. So these are all of the line items that we didn't actually map to a schedule of value. So those are our unallocated costs. So on this project, I can see there's $68,000 of cost that I have unallocated to a schedule of value. And I can see I've got $53,000 of cost on those unallocated. So that means I'm 79% across these line items here. But if I look at the rest of my numbers, I'm only 22% complete. So this is really important because this is basically telling me those unallocated costs, those are typically your general conditions that are going to span the entire project. It's going to be your vehicle expenses, project management, supervision, trailers, whatever else you have to have on the site that's going to span the entire rest of the project. So if I'm already 79% on those, but I'm only 22% complete, then that's a huge problem. So I can see how that's actually leading to $55,000 in underbilling. And then that means that I've got $39,000 spent more on that than I would expect based on this, where I am at this point in the project.
Good, thank you. Well, I think that's kind of for the questions. We have another minute or two left here. Anything else you want to touch on, or should we kind of turn over the floor for questions, or?
Yeah, so and I think it might be good just to recap all this real quick here. So kind of what you'd want to do is look at this kind of top line number here, right? If I'm $13,409 underbilled on the project, that's when I'm underbilled across the whole project. And now I can kind of break that down and see what's driving that. So I can say, hey, I'm actually overbilled on my rough plumbing electrical. I'm overbilled on my concrete. Haven't billed on waterproofing at all. I'm a little underbilled on my finished plumbing and electrical. But really, my problem here is my unallocated costs, my general condition. So I got to really interrogate, hey, that $39,000 that I've spent on my general conditions, more than I would expect based on this percent complete, is that justified, or is it based on another quirk of the project? So it's really not just about kind of going through the math that I went through here, because I know that can be kind of very tedious and in the weeds. It's really to try and do that math to tell you what is this telling me about the project, and is it a good sign or a bad sign for the project, and do I need to take corrective action based on that?
Understood. Yeah, really good snapshot to kind of see where we're slipping instead of just, just having one number and we don't really have much picture into it. So, well, great. We pretty much up on time here, so we'll turn over the floor for questions for a minute and wrap it up. I've got a question there. Good question. I can add that for you, Phyllis. Just give me a few minutes
Yeah,
here and I'll.
so
Oh, go ahead.
I was gonna say it's you find it under the Billings module under the project. So if you go to your project right now in our financials and you don't see Billings and you would like to have access to this tool, yeah, just reach out to Garrett and you can get it turned on for you. Does the tool overall work still if you don't tie out your schedule of values? It does, but it's much more limited. Uh, So when you say tie out schedule of values, are you referring to making sure that your schedule of values equals your contract value? Oh, assigning it to the budget. Yeah, it will still work, but it's going to be much more limited. Basically, you're only going to have kind of like the unallocated cost line item. So it's going to give you that kind of breakdown, but it's not going to give you as detailed as of a breakdown in terms of understanding, hey, what is the over under billing per line item, the structural over billing, the true over under billing. So we know it's a little tedious, especially if you've got an expansive budget list to kind of go through and assign each budget line item to your schedule of values. But that 2 minutes it takes the project manager to kind of assign it, we think is something that gives you really valuable insight. And one of the things we're actually looking into and hoping to release probably in the next month or so is functionality that would basically auto map your budget line items to your schedule of values. So you're not having to go through and do it manually. So that's something to keep an eye out for. Is hopefully we have that released in the next month or so. I'm noticing the estimated costs are lower than the actual costs on some projects. Is there a way to automate that adjustment? Um, so if the estimated costs are lower than the actual cost on some projects, what you would want to do is make sure that the budget is updated to reflect that. Um, it's not going to do it automatically because that's some of the analysis we want to get out of this tool, right? Is understanding what are those cost overruns and how that's contributing to your over under billing. So if that budget hasn't been updated to reflect the actual cost overrun, you basically want to see that to understand, okay, how is that actually contributing to the overbilling or underbilling on the project?
Well, great. I think that's probably it for questions today. Thanks everyone for attending, and please reach out if you need the recording or you have any additional follow-up questions. Be happy to help. And I believe we're back in 2 weeks using AI to create change order requests. So that'll be an interesting one. I haven't touched on that
Very
before.
cool. Nice.
So, well, thanks everyone for your time and have a great day. Enjoy, Kevin.
Thanks, good. I'll talk to you later.
You got it. Bye.